Good morning, good afternoon, good evening, viewers. Today I want to talk about a stock called Apollo Hospitals, which is a company trading in the National Stock Exchange of India. It is quite a popular brand of hospital chain with presence across the country, and more recently, they have ventured into their own pharmacy chains, which is expected to be a growth driver for this stock. What is also noteworthy to mention is this company has made its way into the Nifty 50 index in the last couple of months, so which is a good performance. This shows how the company has grown their market capitalization in order to get into the top 50 publicly traded companies in India. What has interested me about this stock recently is this correction or a drawdown of about 40% from its all-time highs back in November. Although 40% is a large correction or a drawdown, it is still, it seems to be a typical correction for a stock which has really run up tremendously since the pandemic by about 400%. So the stock has almost gone up 4 times. So it coming down by about 40%, seems to be a bit normal, having had this amazing run. The question is this just a normal correction, or are the investors expecting the revenues and profitability of the company to go down in the future? And maybe that is a cause of this correction. Let's find out. If you look at the financials of the company, so they have been showing a lot of growth. They have been around for about a decade, and what has really excited me is the performance in this current year, which is the year ending 2022, the last 12 months, where you can see they have grown their revenue by 3,000 crores and their profitability has just gone up almost 7 to 8 times. That is tremendous. So can they replicate a similar growth in profitability in the next year, which is the year 2023? Even if they do, replicate at least 50% of these profits, let's say 40 EPS, even then, that EPS number would be more than what they have achieved in their last 10 years. So that is still an impressive EPS number. Having said that, what is the price that you are paying for this earnings per share, for these kind of earnings? So the stock is currently trading at roughly 3,500. So that translates to a price to earning multiple of 44. 44 is definitely expensive when you compare it with the Nifty 50 index itself, which generally trades at a PE of 15 to 25 times. But since the Nifty has corrected in the last few months, it's currently about 19 to 20 times multiple. So if you buy Apollo Hospital stock, you are paying double the price of what you would pay for the entire Nifty 50 index. So is the stock really worth it? So is there a great growth story? Will the EPS grow tremendously like it has done in the last 12 months? Let's compare Apollo amongst its peers, the other healthcare publicly listed players. So if you look at the PE, it seems that 44 is not a bad PE to pay for this stock, because all its other competitors are almost trading at similar levels, if not more. And so given the great performance of this company in the last 12 months, so maybe 44 is not a bad PE to pay for this stock. Having said that, is it a good time to buy? Well, I think it is a good time to start nibbling into the stock, to start building your position. I wouldn't be surprised if it comes down more. It can come down up to 3,000, where in the past, it has been met with some buying demand because there was a bit of accumulation that has happened at these levels, 3000 to 3500. So definitely if the stock comes back to that range, there will be some demand and some investors will be interested from a technical perspective. So to put it in a nutshell, maybe it's a good time to start building a position and start adding more and bring down your average price if it goes down further. The expectation is that the company can replicate their revenue and EPS growth in the upcoming year as well, for the stock to again climb back up. One more thing to mention is that this company is in the healthcare business. So in the current environment where we are in, where there is a lot of negative sentiment about with the high inflation, with the geopolitical tension, supply chain concerns, and the expectation of a recession in the global markets. So healthcare is one of the defensive sectors which is expected to perform well, relatively well, even in times of economic distress. Because hey, if you fall sick, you still have to go see a doctor, and generally people do not compromise on spending on their health, even if the going is tough economically. So that could be a reason why the healthcare companies are trading at a high multiple, especially in India. So in terms of a multiple perspective and the expected growth that is ahead, or at least a kind of a robust performance during a recessionary period, if at all there is an economic downturn that happens, so it could be a good time to start adding a position. So that's it from me, folks. Stay safe and have a good day.